late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, but made it so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to do a big update here. We're going to take a look at a ton of different charts. I have been away for the past week, so I haven't been doing any videos. I've still been a little bit active in the Telegram community as well. We have taken a couple buys of stocks as well as made some moves in our portfolio. But what I want to cover today is just kind of a broad market update. We're going to take a look at a bunch of different charts here. So we're going to jump over to our dollar index here. That's the DXY. Looking on the weekly chart, I've also got the S&P overlaid on the chart here as well. That's in yellow. So I wanted to kind of highlight the performance of the dollar versus the S&P. This is something we've looked at before. We kind of see when the dollar is performing really well, the S&P is not performing that well. That is because people are essentially selling their riskier assets to stockpile their dollars because they believe there's some sort of risk or there's some sort of economic uncertainty, weakness to be afraid of, and it could be, you know, looking at that correction and then just wanting to take advantage of that correction more so. So what we see currently right now is the S&P trending up. It's broken out from the lows very well, but what we saw here, the dollar showing a lot of strength right through here, and that big drop in the stock market. And now the dollar showing weakness, and we're getting that big bounce in the stock market. So we have seen the dollar put in a lower low here than over here, but the S&P hasn't been able to put in a higher high yet. So that's interesting to pay attention to. But looking at this price action, just seeing here that performance, we could start to see the dollar get a bit of a bounce and see the S&P come back down. I do think we're going to retest these higher lows on the S&P. I don't think it's just going to be straight up and to the right forever. Rarely ever is it that case. Like here in COVID, they printed $12 trillion. So to compare this instance here to this instance over here, it just doesn't really make a whole lot of sense to me. It's not the same macroeconomic conditions. We're not going to print $12 trillion and give it out in stimulus checks to everyone essentially who applies for it. So to expect this to be a sustainable rally like we're going to get post-COVID, I'm not really in that camp, especially with all the continued uncertainty in the market. I think we're going to have to come back, retest, hopefully hold these lows on the S&P before continuing up to the upside. So we're just going to get rid of that for now. We'll flip back to our candlesticks. We'll take a look at our indicators. We'll also take a look at some similar patterns in the past. So we kind of see since 2008 the dollar here just trending up. So we had support in through here. We kind of broke below here briefly, kind of deviated below, got back above it, managed to hold that trend line through here, and in through here, and now we've got that trend line coinciding with that 786 target in through there. So we could see that dollar come down to this region here on a technical basis before finding that support. But historically, looking back, we see that it didn't quite ever make it to that 786. Right here, we kind of just bounced multiple times on this 618 zone here. So you can see 1, 2, 3, 4, 5 times within this 0.5 fib to the 618. Over here, we had 3 touches within this zone here. And right now, we're at, we have a few little moves here, but just 2, I would say, that are really actually that close to the 618. So we could be due for a bit of a pump in the dollar as well if we see something like this play out where price moves to the upside. That's not going to be ideal for risk on assets if the dollar plays out like this. So same thing, similar pattern. If we start to see this breaking out to the upside, that's going to be really bad for our stock markets and our risk assets. So we want to be aware of that. We'll take a look at our indicators. We see that compared to this first move here, the RSI is oversold, much more oversold than this move over here, which makes me believe we're looking more at like resembling this move in through here. You can see the RSI came to similar levels before getting back up and coming back retesting here. So we came to oversold levels, got a little bit of a bounce, consolidation phase, and ultimately putting in those lows right through here. The MACD also putting in those lower highs here, so lower highs, and we see that the DMI is also kind of a similar setup here. We're seeing the orange on top of the red with the blue underneath, and that's kind of what we saw in through here, orange on red with blue underneath. And same thing that we saw over here, orange with red and blue underneath. So that tells me that right now the bearish trend is still dominant, but it's losing momentum. So if we start to see this orange line break below the red line, that tells me that the dollar is starting to get a little bit of strength. And same thing on the vortex indicator. The bearish dominance is still favored here with that negative line holding above the positive line, and they're kind of diverged away from each other. So we can take a quick look at the daily. So we're starting to see a little bit of bearish momentum slow down on the daily. So we see that vortex indicator curling up, and we see our DMI positive line curling up, breaking above that ADX. We want to see it get above the negative orange line as well, and we want to see that ADX start to curl up and support this move to the upside. So pay attention to that for the dollar right now, and if we start to see this move then and we start putting in those higher highs and higher lows, we could be looking at that relief move for the dollar. We're going to flip over to the US 10-year here, which is up 1.7% today, so it's remaining at elevated levels here. Still, there's still that disconnect in the stock and bond market where bond traders are really convinced that something's going to break, and stock traders are convinced that the lows are in, that this is a V-shaped recovery just like COVID, and we're going to go up and to the right. So what we see, holding here at that 4.68%, still elevated, still kind of a concern in my opinion. Still a lot of people recognizing that uncertainty in the markets. So volatility is down, which is good, but we are still seeing that strength in the bond market. So again, this continued kind of disconnect where the market is really not sure whether we're going risk on or risk off. We see the S&P here. So again, we did just breach that 600 here on the SPY. So pretty close to all-time highs. It's been a crazy move back up. Let's take a look at our indicators. We're looking pretty good here in terms of the weekly. We see that bullish momentum kind of building here on the vortex and the DMI. The bearish momentum slowing down. We got a bullish cross of the MACD with a green histogram flip there. Nice little volume here, nothing crazy, but decent volume, and nice, we got a little bit of a bounce here, holding the moving average on the RSI. So the weekly chart for the stock market looks pretty good. Looking at the daily chart, we also see, so here's where we get a little bit of mixed signals on the daily. Let's take a look at the price action. We did kind of break this previous trend line that we were following up. We might be just back above it, not quite. So holding this trend line for now, we could get back above it. But what we see here is the RSI bullish move there, or bullish setup. MACD is looking pretty good, and the DMI also, if we continue to see this curl up, that's what we want to see. So we could get a bit more of a sustained move here on the daily chart when it comes to the S&P. That being said, when we flip to the weekly, we are extended. We need to come back and retest support. So where is the most probable level? We're just going to pull our Fibonacci tool as we usually do, and what we see here is that that fib level at 0.6 to the 0.5 comes in at about 555 down to about 545. So that could be an area to add to an S&P position, and also looking to also take advantage dynamically down to the 786 here. So the S&P, I wouldn't be chasing it right now. Again, we're just coming into all-time highs. This is going to be a lot of resistance in there, so we need to be aware of that. We can see all this resistance right there. That's going to be big resistance. We need to break it. If we get any more kind of uncertainty or bearish news around the tariffs or trade wars, then I would expect this to come back and retest some of those lower levels. If we take a look here, we have a ton of gap fills as well. So that's another thing that I frequently point to in stocks. We get these gap fill zones just from price opening up higher than it was. So we've got one there. We've got, looks like we've got a little one up in through here. So this would be a very aggressive entry here, in my opinion. But ultimately, you can see if we were to get an entry down here in this gap, that's actually coinciding with that 786 Fibonacci in that golden zone. So more confluence of support. We can also take a look at some of these indicators and see here we probably have even more confluence of support down there. So what do we see? We've got liquidity pools and we've got swing breakouts. So we've got a swing breakout right through here in this gap fill, so a good support through here. With that bull market support band, we've got the 50-day and the 200-day moving average, so we've got a decent amount of moving average support there. We've got a little bit of horizontal support with this daily gap fill. The problem I kind of see with this move is our VRVP point of control. If price comes back down here, we're now under the VRVP point of control, which may act as resistance, and we could be due for a move like this where we actually, kind of downtrend, chop sideways for a little bit, coming back to these lower targets down here. So this is a potential outcome. Otherwise, we want to wait for continuation, a breakout, a back test of that VRVP point of control, and then continuation to the upside. But for now, we're closer to resistance than we are to support. We're in no man's land. It's not really worth the risk, in my opinion, currently. So we see that looking pretty good. The IWM, so this is small cap stocks. They are lagging the S&P a little bit here. So the S&P and the NASDAQ have already gotten above both their 50-day and their 200-day moving averages, whereas the IWM is actually a little bit lower here. It isn't as close to its all-time highs. So S&P is right near its all-time highs, where the IWM is actually still down 14% from its all-time highs, and it is not above these two moving averages here. So the IWM is really important because that is the Russell 2000. That is the majority of companies that make up the market. So the S&P, a lot of the gains are made up of a handful of stocks that really kind of concentrate that liquidity into these stocks, and they kind of carry that index, where the IWM is the small cap stocks. It's kind of a better gauge of the overall economy, how it's performing. We don't really want to see it lagging heavily behind the riskier assets here, the risky bets, because that tells you that the big guys are doing okay, but the small guys are kind of hurting right now. They're feeling the pressure more so, that economic pressure. It hurts the little guys a lot more than the big guys, who can kind of just put off that increased costs or the kind of effect that these tariffs are having. We'll flip over to TLT here. So we have been out of this position for a little bit here since it broke down, but we're looking for that continued, if we can hold this here, hold at $85 roughly, then I do think TLT could continue to the upside. Maybe we just get another little push up. I do see a bit of a trend line right through here, so we can kind of gauge this. Let's just move this one a little bit over here. Sorry about that. So yeah, we take our trend line and let's see if we were to build our TLT position, anywhere, if we get down to this green zone in here, I'm going to start building a hedge position again. So this is kind of the hedge for that downside, that recession potential scenario. So I'm looking to really build a position down here. Otherwise, if we come down here, hold these lows, and we look at a swing position, then you could look to take profits kind of on a push up to this zone up through here. So TLT, showing that there's not showing a little bit of strength here, uptrending on the daily, but nothing too crazy. If we take a look at our indicators, kind of that bearish setup here on TLT. So that's why I kind of think we might see a little bit more continued strength in the stock market, and a little bit of weakness there in TLT. Gold also looks like that bearish momentum is building on the daily. Look at that. So kind of, consolidating here, stuck just at this VRVP shelf here, but the point of control is down there, so we'll see. It'll come back, maybe tag the 200-day moving average. If we can get under $3,000 an ounce and you're bullish on gold, maybe worth adding to a position there, in my opinion. Silver is doing well here, breaking out. It's doing kind of very bullish momentum on the Vortex DMI. RSI is just reaching that overbought territory, and the MACD is also trending up. When we look at the weekly, it's looking a little bit better, so we can sustain this move on the weekly. And look at this, breaking out to all-time highs, and we will see if price just comes back, retests the highs here, or the previous highs, and that is now support. If we can come back, hold this, and maybe continue to the upside. We can also take a look here at gold, and let's look at the comparison. So we'll look at the new price scale. So gold, here we recognized kind of gold was outperforming silver, and silver getting that bounce up here. So that's good to see. It kind of tells you that when gold's really outperforming silver, it's kind of that risk off narrative, because it's that safe haven asset, where silver's not as much of a safe haven asset. It's got more industrial use, and it kind of does a little bit better when the economy is doing well. So we also see, the Swiss franc holding relatively well here, kind of in that area still. And we'll take a look at the Japanese yen and see how they're doing. So also kind of just consolidating in this kind of bull flag pattern. So both the Swiss franc and the Japanese yen continue to look good. The macro right now, it's hard to really say. I do think the SPY could sustain a bit more of a leg up. I do think we're a little bit extended on the lower time frames, and that we should come back, retest those support levels before continuing to the upside. So we're going to take a look at some stocks really quickly. So we're going to look at Tesla is back above 300. So if you're aware, you've been kind of paying attention, Trump and Elon are currently fighting, and we saw this huge drop in Tesla yesterday from the highs previously. That was a 25% drop. So what did we do? We did not pay attention to all the noise. We targeted the Fibonacci golden zone, as we always do. We found this huge confluence of support. This is exactly what we talked about in my Telegram group yesterday. So the community doing really well to bring this to my attention. We found the levels, and we actually had our orders filled down here in this region. So that was pretty impressive. The price was about $310 at the time. We found the level, and probably in the next couple hours or so, it wicked down. A bunch of us got our entries, and we're actually back up to $300 here, right around that 200 SMA and that 50-day EMA there. So again, we're just going to continue following this one. I'm not that bearish on Tesla. This doesn't change my opinion. A fight or a personal feud between Trump and Elon does not change anything in my opinion. I think it's worth adding to a Tesla position down here in that golden zone, ultimately looking to dynamically DCA all the way in this whole zone in through here though. So again, when I'm saying I'm DCAing or dynamically DCAing, I'm not buying crazily into this initial drop here, because we're not sure if that's going to be the actual low. Now we can flip to the lower time frame, and we need to watch for that trend to reestablish itself, because we have lost that higher high, higher low structure that we saw through there. So Tesla is one that we're going to be watching for continuation here. We want to hold those lows, potentially add to that position, but for now, really happy with the buys down here in that golden zone. So really good job finding that, getting those buys, and then executing on them. Looking at Nvidia here, we can see bullish momentum favored here on the Vortex and DMI on the 4-hour. We look like we're headed for a bullish cross of the MACD. The RSI has that bullish cross. We are above the VRVP point of control. Price action trending up and to the right, but we're coming into heavy resistance. So this is a lot of resistance up and through here. We entered Nvidia at $100 roughly, so we're up 42% on this position. If you're in this trade here, it's not the worst idea to protect those profits, or at least some of those profits. I do think when we flip to the weekly, we can see, look how much more extended we are. This is the same thing as Bitcoin, where we were just up and to the right for about 8 weeks straight. I took some profits on Bitcoin around 111,000, and we dropped back to 101,000 recently. So again, don't be afraid of taking profits. We've got sell side liquidity here. We've got massive resistance here. So it is quite, it's a decent place to take those profits, or at least protect those profits with a stop loss. If I was to put a stop loss in, you'd be looking at holding the lows here at 132 or lower. If we break back down here, that's kind of that downtrending price action that we need to be aware of. Otherwise, look for the additional entries. If we can back test this breakout at $115, that's going to be a good swing trade opportunity in Nvidia. That's going to be where I'm going to look to add to my position. But otherwise, really wanting to protect the profits up here. Let's scroll down a little bit here. Let's look at Tempest AI. This is another one. We recently bought a position. We had a short seller come out, release this short report, attacking the stock. This was this massive red candle. And guess what it did? It brought us back to our golden zone. And you know what we did? We didn't panic. We just bought. So again, these short sellers, they take out short positions on the stock and then they release these reports. The stock tanks and then they gain on their short positions. So it's just market manipulation. We're not worried about it. Just follow the fundamentals, and the technicals came back to our level, added to our position, and we're back up a little bit to in profit again. So another nice move there. Palantir, I did get stopped out of my Palantir position. We dropped down to $120. That's okay. So I booked about 26% profits on that position. I do think Palantir has run pretty crazily to the upside here. So I do expect, could get a bit of a cool off period, and I want to buy, looking at that lower level here. So look at this extension. We've pretty much come from $66 all the way up to $135. I'm looking for that 618 entry. If we can get under $100 for Palantir, that's going to be where I'm going to look to rebuild that position. So bought in at 95, sold at 120. Wait for it. If we can get back in at, under $100, we can buy back in or start dynamically DCAing back in and look to take advantage to that upside again. Looking at BABA here, we see we are coming back. We did come to that just shy of that 618. We just missed it. I was away and I wasn't able to take advantage of that, so I didn't get my profits back in. But it doesn't mean that this is the low, and we're going to continue up from there. We still have that potential to come back and retag this area down here. So if we get under $110 for BABA, that could be a decent place to add to your position, or potentially start a position if you don't have one. SMCI, Super Microcomputer, another one that we bought down here on that retest, sitting in profit. We're waiting for this to break out of this downtrend, and then we want to get in on that back test. So wait for the breakout, back test, we can add to our position here, and then continue to the upside. But I like Super Microcomputer. MP Materials, another one. We caught this one down here in the golden zone. So this is another great example of the community really taking the tools, the skills, applying them themselves. I might, even though I've been away the last week, I've had the guys and girls in my group bringing these charts to my attention, and I'm seeing them kind of execute these trades on their own is really awesome to see. It shows me that people are taking the time to learn the skills, learn the tools, and apply them themselves. And what we've seen is another nice move here by MP Materials. We have an average price of about $21.75, and we're sitting at $25.85 as the current price. So nice profit here for MP Materials. I do really like this one, and I expect it to continue doing well with the continued push for domestic manufacturing, domestic resource extraction. This is the only current operating rare earths materials miner, refiner in the US, so they kind of have this monopoly. They also have this deal with Saudi Arabian energy companies, Saudi Arabia mining companies, that they're going to kind of be responsible for helping integrate this full supply chain of rare earth metals. So MP is one that I'm bullish on, and we do see it's kind of just pumping up a little bit too much into the 200-week and resistance up here. Watch for the higher low. The next entry you'd be looking at, if we pull our Fibonacci, is going to be about $21, $22. Yeah, so you're looking at $50 to $22 as that entry for MP. We'll take, actually, that's going to be it for the stocks. I'm also going to do a Bitcoin, crypto, and some crypto-related stock updates. I'll do a separate video just to keep this one a little bit shorter. This has been the macro update, as well as an update kind of on the different stocks, some of the positions that we took, as well as updates on the positions that we previously had. So thank you so much for watching, guys, and I'll see you in the next one.